This show is part of One Place, a daily network of focused briefings across the stories people follow most.
Welcome to today's Roundup. We are diving into a heavy news cycle dominated by geopolitical shifts and major technological leaps. Let's get you caught up on the essential headlines from around the globe.
UK households face rising costs from the Iran war.
Gold prices suffer their worst weekly drop since 1983.
Global markets brace for a prolonged Middle East conflict.
Elon Musk unveils his ambitious Terafab chip manufacturing project.
Western car makers risk irrelevance by retreating from electric vehicles.
Andrei Karpathy uses an AI agent to manage chores.
Reddit CEO prioritizes hiring AI-native new college graduates.
A federal worker finds happiness in retail after retirement.
Silicon Valley turns to peptides for human body optimization.
Indian markets remain volatile amid rising global energy concerns.
First, the UK economy. Britons are facing a fresh cost of living crisis as the economic storm from the war in the Middle East hits home. This phenomenon, being dubbed Trumpflation, is driving up mortgage payments, energy bills, and the cost of driving. Lenders have already pulled nearly 1,000 mortgage products from the market. For those looking to secure a new 2-year fixed deal, the average cost has jumped by about 0.5% in just a week. This means a typical borrower could end up paying an extra £900 a year.
It is a massive blow for the 1.8 million households whose fixed-rate deals are ending soon. Beyond housing, energy bills are expected to climb by over £300 annually once the current price caps expire. While households were previously finding savings through fixed tariffs, those deals have essentially evaporated. The Bank of England has held rates at 3.75%, but the conversation has shifted from potential cuts to the possibility of further hikes to combat the inflationary pressure caused by this sudden geopolitical unrest.
Next, gold's historic slide. Gold is on track for its worst weekly performance in 4 decades, a staggering decline not seen since 1983. As the conflict in the Middle East intensifies, the U.S. dollar and bond yields have rallied, particularly following reports that the U.S. might deploy ground forces. This has led traders to bet on a 50% chance of an interest rate hike by October. Since gold doesn't pay interest, higher rates make it less attractive. The metal has dropped every week since the initial attacks on Iran, reflecting a massive shift in investor sentiment.
The sell-off was accelerated by technical signals and automated stop-loss orders. When prices dipped below key levels, it triggered a wave of liquidation. Analysts note that bullion-backed ETFs have seen outflows of more than 60 tons in just 3 weeks. Despite this recent crash, gold is still up about 4% for the year, having hit record highs in January. However, the current environment of rising energy costs and a strengthening dollar has forced many investors to take profits and move away from the traditional safe haven asset for now.
Now, the global outlook. Initial hopes that the conflict between the U.S., Israel, and Iran would be a short-lived excursion are fading fast. Oil prices have surged past $100 a barrel, and European gas prices have doubled. This is creating a stagflationary threat that could burst the market's complacency bubble. Major central banks are warning that the war will have a material impact on global inflation and growth. We are seeing immediate disruptions in travel and logistics, with canceled flights and rising fuel costs for motorists becoming the new norm across many developed nations.
The industrial impact is particularly severe in Europe. Heavy industries like chemical manufacturing are raising prices due to the energy shock, which in turn spikes the cost of fertilizer. This sets the stage for a significant rise in global food prices. Iran has even threatened to push oil to $200 a barrel by targeting key shipping routes like the Strait of Hormuz. If these disruptions continue, the economic fallout will extend far beyond the Middle East, potentially triggering a global recession as supply chains and energy markets remain under extreme pressure.
Moving to Elon Musk. Elon Musk has officially unveiled Terafab, a massive joint venture between Tesla and SpaceX aimed at in-house chip manufacturing. Speaking from a defunct power plant in Austin, Musk described the project as a step toward a galactic civilization. The goal is to produce a terawatt of compute annually. This is a Herculean task, as the industry is usually split between designers like NVIDIA and manufacturers like TSMC. Musk believes this vertical integration is necessary to scale Tesla's robotaxis, and the Optimus humanoid robot, while also supporting new space-based AI satellite deployments.
The Terafab will produce two distinct types of chips. One is optimized for Tesla's vehicles, and the Optimus robot, where Musk expects production volumes to be massive. The second, called the D3 chip, is specifically designed for the harsh environment of space. Musk envisions data centers operating in lower orbit, powered by solar energy. By bringing logic, memory packaging, and testing all under one roof, Musk hopes to accelerate the development cycle. It is a high-stakes gamble that could redefine how his companies handle the massive compute requirements of their future AI projects.
Next, the EV market. Western car makers may be repeating a historic mistake by pulling back from electric vehicles just as oil prices soar. In the 1980s, Detroit lost ground to fuel-efficient Japanese imports. Today, the threat comes from China. Brands like BYD are rapidly gaining market share in Europe with affordable, high-quality EVs. Meanwhile, companies like Volkswagen and Stellantis have written off billions in EV investments, refocusing on combustion engines. Experts warn that this retreat hands a structural advantage to Chinese rivals, who have already built significant capabilities in battery technology and software that will be hard to reverse.
The situation in the U.S. is even more stark, with the current administration dismantling emissions rules and canceling consumer tax credits. However, the Iran war has reignited consumer interest in EVs as petrol prices spike. Online traffic for electric cars in Germany jumped 40% since the conflict began. If Western manufacturers hesitate now, they risk becoming irrelevant in a global market that is clearly shifting toward electrification. By prioritizing short-term profits from petrol cars over long-term innovation, they may be dooming tens of millions of jobs in the traditional automotive heartlands.
Now to Andrej Karpathy. Andrej Karpathy, a prominent figure in the AI world, has shared details about his personal AI agent named Dobby the Elf Claw. This autonomous system manages his home, controlling everything from lights and HVAC to his pool and security cameras. Karpathy explained that Dobby has allowed him to delete 6 separate apps from his phone by consolidating their functions into one interface. The agent even monitors his deliveries, sending him WhatsApp messages when a FedEx truck arrives. It represents a new wave of agentic AI that moves beyond text generation to taking real-world actions.
To power this sophisticated setup, Karpathy recently received a high-end superchip station from NVIDIA CEO Jensen Huang. This hardware is specifically designed for heavy AI workloads, providing a spacious home for his digital house elf. Interestingly, Karpathy isn't worried about the security risks of an AI controlling his home. He keeps the system on a local network, meaning it isn't directly exposed to the open internet. This kind of DIY home automation highlights how top engineers are already living in a future where AI agents handle the mundane chores of daily life.
Shifting to Reddit's hiring. Reddit CEO Steve Huffman is taking a unique approach to the current job market by focusing heavily on hiring new college graduates. He describes these young workers as AI native because they learn to program alongside AI tools. Huffman believes these candidates are so valuable that if a company doesn't hire them immediately, they may never be on the open market again. While some tech leaders fear AI will eliminate entry-level roles, Huffman argues that increased productivity from AI will simply allow his company to build more products rather than reducing the total headcount.
This optimism comes at a difficult time for graduates, as the overall tech job market has cooled and unemployment for degree holders has ticked up. Despite these headwinds, Reddit is actively recruiting for its Snowdern's internship program and various full-time engineering roles. Huffman's strategy suggests that the ability to leverage AI is becoming the most critical skill for new hires. By bringing in talent that views AI as a fundamental part of the creative process, Reddit hopes to stay ahead of the curve in a rapidly evolving social media and technology landscape.
Next, a career change. Karim Masson, a former federal employee with over 20 years of service, recently shared her story of retiring early to work part-time at TJ Maxx. After a long career with the Social Security Administration, Masson found the final years increasingly stressful. The removal of telework options and a perceived lack of respect for federal workers under the current administration made her daily routine difficult. She often felt demeaned by political rhetoric that painted federal employees as a drain on the system, which then translated into more belligerent behavior from the public she was trying to serve.
Since making the switch to retail, Masson says she is the happiest she has been in a long time. The flexibility and decreased stress of her new role stand in stark contrast to the high-pressure environment of managing complex Social Security cases with dwindling staff. Her experience highlights a broader trend of workers prioritizing mental health and work-life balance over traditional career paths. For Masson, the quiet productivity she enjoyed while working from home was lost when return-to-office mandates were enforced, ultimately leading her to choose a simpler, more fulfilling life in retirement.
Now, the peptide trend. In Silicon Valley and Hollywood, a new health obsession is taking hold: peptides. These short-chain amino acids are being used for everything from better sleep and memory to muscle growth and weight loss. While some, like Ozempic, are FDA approved, many others exist in a regulatory gray area. Users often order them from overseas, mixing and self-injecting the compounds at home. Max Marchioni, CEO of the startup Superpower, has become a vocal advocate for this trend. He sees a massive business opportunity in providing lab testing and tools for people who want to optimize their bodies.
The market for these substances is exploding, with GLP-1s alone expected to be a $100 billion category by 2030. For many in the tech community, the subversiveness of using these research-only compounds carries a certain status. They view the human body as a system that can be engineered and improved through data and chemical intervention. Superpower aims to capitalize on this by offering comprehensive biomarker tracking. As word of mouth spreads, the use of peptides is moving from a niche hobby for the techno-optimized into a mainstream cultural phenomenon that could reshape the consumer health industry.
Finally, the Indian market. The Indian stock market ended the week relatively flat, but remains on edge due to geopolitical tensions. While there was some short-term relief as crude oil prices moderated slightly, the market experienced sharp intraday fluctuations. Experts believe the near-term direction will depend heavily on developments in the Middle East, particularly regarding the Strait of Hormuz. Any prolonged disruption there could keep crude prices above $100, which would intensify inflationary pressures and affect India's current account. Investors are closely monitoring foreign institutional flows and the movement of the rupee against a strong U.S. dollar.
The conflict entered a critical phase recently with new warnings from the U.S. and reported strikes on nuclear facilities. These events have kept energy supply concerns at the forefront of market sentiment. While Brent crude saw a slight dip toward the end of the week, the overall environment remains highly volatile and event-driven. Market analysts suggest that any signs of de-escalation could trigger a relief rally, but renewed escalation will likely lead to further downside pressure. For now, the Indian equity markets are in a period of consolidation, waiting for clearer signals from the global stage.
That wraps up our briefing for today. We hope these insights help you navigate the complex shifts in the global economy and technology. Join us again tomorrow for more focused updates.
For more daily briefings and deep dives into the stories that matter most, be sure to follow this show on your favorite platform. Have a productive day ahead.